are still struggling to finance their operations only with the VCs. And yes, what we do as a venture debt provider, we support already like 5 years ago, we have initiated this initiative for venture debt, where we provide financing for innovative companies. And under this initiative, we have already provided 3 billion of investments, indirect investments, with average tickets of around 20 to 25 million. And under this program, we finance innovative companies, mainly in the field of life science, ICT, engineering, and in general, technologies that could potentially have a great impact on our society.
So I have a question, Anna, for you, and it's in regards to the EIC, which is launching in December. So how is that fund looking to solve the massive fragmentation within Europe that's such a barrier to cross-border investment?
Yeah, so EIC is a separate to European Investment Bank activities. It is a fund which is set up together with the European Commission, which provides grants, but also direct equity financing to innovative companies as well. And through that, EIB is an advisor in this process. So we help to structure the investments, and it's only a pilot. So it is one of this initiative, which is a missing piece between the grants, angel investors, VC, private equity, venture debt, and commercial banks. So it is like additional support, which is supposed to provide additional liquidity directly to the startups. And the tickets there are of around, like, they can be small, of around less than even 1 million euro, but they can go even up to 15 million. So it's very flexible financing, which is available to different sort of companies and different sectors. And we go here alongside the other investors, VC investors, private equity investors, where we try to, partner up with private sector investors to, let's say, provide them with additional money to invest and scale up the companies.
Great, thanks a lot. And perhaps with your, close relationships and connections in the Middle East, how do you see the environment differs between Europe and your region, for example?
Look, I'm not an expert on European tech, but I can tell you some of the main features of the early stage space in the Middle East region. Some of the things that I would say, first of all, is that we don't have as complete an ecosystem as maybe in more developed markets. And so early stage entrepreneurs tend to need a lot more hand-holding. They need more support, active support in helping them deliver their products, understand how to navigate the relationship with investors. In some places, maybe there are pre-accelerator programs that really help people develop their ideas and get them ready to speak to an investor. In many countries, that gap is missing. And so even when they show up to speak to an angel, or they show up to speak to an accelerator, they're a bit still behind in terms of really clarifying their idea and the feasibility of their idea. So that's one thing. We've heard a lot about the role of universities. They're making a foray into this space, but it still hasn't been very successful. And I wouldn't say that's just regionally. I would question whether universities have figured out their involvement in the space more broadly. We have a few examples of really successful universities, MIT, Stanford, but for your average university, they're still figuring out how to be part of theirs. There's a big culture difference between them and the private sector. And so this is the gap that they need to figure out how to fill. The government in the Middle East is a big player in the tech space. As in many emerging markets, they've created a lot of fund-of-fund structures to try to encourage early-stage investing. But oftentimes those programs are not equity-based, they're grants and training programs. And what we find is that the entrepreneurs that are participating in these programs may be a little bit less serious, less committed to kind of building their startup. So there is a lot of challenges facing the early stage space. But I think one of the trends that we're seeing as well that reflects with what's going on globally is verticalization. Increasingly, the startups that are launching in the early stage are, fintech, health tech, ed tech, and early stage investors have to become much more specialized to be able to really keep up with the technologies that are impacting each of these sectors, and be able to support those startups in growing. So the verticalization is important. And I ask about crowdfunding, and this maybe also to the rest of the panelists. There was a lot of hype around crowdfunding, a lot of hype around ICOs, initial coin offerings, and the potential to raise money that way as alternatives to traditional venture or early stage investment. We haven't seen that many very successful companies get funded in their early stage in crowdfunding, at least not in the Middle East region. So I'm curious if that fits with other, a lot of our speakers are coming from emerging markets. So I'm curious if the insights around universities, around the hand-holding required, or around the efficacy of crowdfunding and other instruments, if other emerging markets panelists kind of see the same trends that we're seeing here at MENA.
So perhaps if you could share with us some points from Singapore, Kelvin, would be nice.
I think I've heard from Omar the early stage difficulties, and from Anna as well the institutional view. Maybe I can provide, given the theme of this panel, some of the insights like what Michael has suggested from Singapore. I'll talk about early stage, all right, because that has been talked about, and I think in any market, the early stage gap in funding is always the most critical. And I suppose the startups attending this event are also in a fairly early stage phase. What Singapore has done is a couple of instruments. Number one, they have a one-for-one matching funding, where if I put $1 down to a startup at the early stage, the Singapore government matches that every dollar that is put by the investor. We don't care whether it's fintech, ed tech, health tech, deep tech, AI, etc. The government's rationale, perhaps to draw a parallel to the institutional approach, is that the VC in the middle is supposed to be the expert, acting on behalf as a custodian for the government. All right. The second thing the state has done is to create exit opportunities for deals. I mean, let's face it, if we are investors into an ecosystem or a company, from an investor point of view, we want to exit. But today, the life cycle of a company is growing from 5 to 10 to 8 to 12 years. VC funds are now 10 plus 2, no longer 5 plus 3 years. So what's happened? Companies are choosing to stay private longer. By the time I IPO on NASDAQ, I'll be a grandfather, potentially, right? And how do you make the people that have invested in you at the early stage, your friends, your family, your auntie, your early stage VC guys, exit? So we have created secondary markets that facilitate, monetization of early stage, so that then there is more incentive to go into the early stage. These are like secondary exchanges where there's price discovery for folks that entered at seed and want to get out at B or C. Different risk capital follows the money differently, and we have seen that work out quite well in putting in place the infrastructure to create and generate the early stage price discovery, so that investors can kind of exit. And this is, I think, some stories about how we have helped in the ecosystem.
Absolutely, and it brings me on to a nice thing actually that we discussed last night. You'll remember this well, Robert, at the investor evening, that only just 1 in 1,000 startups make it past Series B. So from your all, perspectives, what do you attribute that, demographic to?
Well, on one hand, if you have a look at this Central Eastern Europe, kind of post-Soviet economies, those are very young ecosystems. And on one hand, it's good because there are many people who are extremely talented, entrepreneurial, willing to do something. There is also a number of funds, most of them backed by public, EU or local government money. But there is a huge lack of experience because in this industry, we all know that there's a very high competition, and the ideas, even with capital and some opportunities, it's not enough. The execution is the king. So I strongly believe that for this region, the extremely important is to be well related, to be well linked with more experienced ecosystems, with investors who've been there, who've done that, and who can provide the know-how, the experience that is necessary to scale globally. That's one point. And the second point is that there is this brain drain that Anna mentioned to some extent, but also if you have a look, there is a growing trend with so-called dual companies. So companies have headquartered, for example, in London, but with operations in Poland or in US, with developers delivering from Poland. And this is also good because it creates the opportunity to transfer this knowledge, to give these people a fast track to be successful. And for example, if they exit, they can be angel investors reinvesting a part of the money from the exit. So this is the young ecosystem, and of course the statistics works as you said, Michael, but we need some space and some time to grow. And the initiative that I tell you in the beginning goes in this way, that if we make it easier, if we attract some international investors, this will only work for good for the local ecosystem and local entrepreneurs. Maybe some of them will stay. Maybe if they go away, they will have some part of this business still here, or even if not, maybe they will come back as VC or angel investors in the future. So I think it's a good thing. I wouldn't be so afraid about this brain if we can somehow manage it.
In your opinion, what's the single most beneficial action that we could take here in Poland to attract international investors?
I think it's the building trust between investors. I think the inflection point will be as soon as we get the first unicorn, and there are a couple of companies on the way, hopefully soon, and this will attract from the marketing point of view. People will start thinking where this Warsaw, Prague, or Bucharest is, but to have some investments on the ground, we need to build the relationship between people, and I strongly believe that the co-investments, local and international investors, is something that will pay off for everybody. So there are two of them, but
I think it's very good points. And if I just mentioned to you, Omar, so you'll be familiar with Sabit's from Saudi Arabia, and during the COVID crisis, they actually reached out to us at Wolf Summit, specifically looking for very, narrow verticals from Central and Eastern Europe. So, are you seeing, more of an inclination with Middle Eastern investors going further afield than they traditionally would for talent?
Yeah, look, I think that this is a broader trend that corporates are today looking to source innovation from startups. And initially, corporates were maybe skeptical. Increasingly today, they understand that whether an acqui-hire, a strategic partnership, or a sourcing of a new technology, this could be a much faster route to market for them than developing things internally. And, definitely reaching out at a global scale will allow them to look at companies that may be more mature than necessarily the companies in the region, and of course, give them a bigger pool to choose from. So the corporations are very much involved. The government is involved, as Kelvin mentioned. The Singapore government is doubling down with on investments in the early stage. In the Middle East, the structure is slightly different, where they're de-risking investment into venture capital funds, or they're writing checks to their VCs as the government as a limited partner directly. And there are initiatives like this in Saudi Arabia, in Abu Dhabi, in the UAE, in Lebanon, in Jordan. There's a whole slew of initiatives of multiple billions of dollars to encourage investors to come in and establish a fund with some, requirements that some of that investment happen in the local market. One of the problems, I'll comment on your 1 in 1,000 number, Michael. One of the problems in the early stage is just how risky it is. And how risky it is means oftentimes it's very, very difficult to make money in the early stage. In fact, very few players make money in the early stage. And we're seeing increasingly the early stage being pulled in this dynamic of we need it to develop robust ecosystems and startups. But very few people are incentivized to do it because the numbers are tiny. You're investing whatever, $250,000, $500,000. The management fees are tiny, so you can't really run an operation. And the upside on carry is limited because most of the startups die. So we need it, and yet the business model and commercial model for the early stage is very much a question mark right now. Very few entities have been able to make it really successful. And Y Combinator is maybe the exception that proves the rule. So I don't know if others, I see Kelvin kind of shaking his head with me and maybe in agreement, I'm not sure, but this is kind of how I see the early stage. And we are early stage investors. We have a joint venture partnership with a regional accelerator program. We've invested in 40 early stage startups to the tune of about $100,000 each. And so we do see these dynamics and how difficult it is to make money in the early stage.
Can I comment on just follow on to Omar's point about early stage, Mike? Right. So what we've done to de-risk the early stage 1 out of 1,000, right? Mike, is that your number? 1 out of 1,000, right? Yeah. What we've done is to set up a separate unit, Rocket Internet style, which is to venture build. We recycle talents from our portfolio companies that have perhaps failed, for all sorts of reasons, lack of market, luck, not being there at the right time, at the right space, things happen, right? So we recycle the talents and the IP into a new company where we venture build together again with other parties. We then grow our stake from 5 to 10% to 30 to 40%, but we always involve, and here's a key point in our venture building program, we always involve a corporate, because we realize at the end of the day, if you're selling to a corporate or to a market or to a channel, the corporate's input is super important. And this is to address your point, Omar, about how corporates not only are sourcing innovation from startups, because it is kind of like an externalized R&D function that is much cheaper to do. But they are also setting up CVC kind of structures. Airbus Ventures, 100 million. Tencent, WeChat, all these Chinese, Ant Financial, the largest IPO in history, they are setting up ventures arms, ventures funds, and they are saying, look, not only am I going to put money, I'm going to put sectoral experts in your board to help you get your minimum viable product out, and I'm going to be a party to your growth. And I think we are going to see the rise of this sort of ecosystem in terms of venture building coming out. We as an early stage VC are taking we have set up a separate unit to look at this, where we'll deploy strategically as well, because we believe the returns are higher.
And I'm a big advocate of the venture building model myself, so I couldn't agree more. So just to bring it to a close, guys, I'm going to ask each of you predictions in VC for the next 5 years. And Anna, if I could ask you first for your 3 bullet points on where we're going over the next 5 years. Yeah, I believe you're on mute.
Apologies. From my point of view, we are going into more and more venture type of initiatives among different actors, private, public, different initiatives joined together to boost the money in the system, which is especially visible now, like during the time of pandemic, that like all the actors needs to play together to bring very good, promising products to the market. The other thing is, as it comes to in which sector the VC sector in VC investments will go, from our perspective, it will go into more and more into sustainable business, sustainable, economically friendly businesses and initiatives, and healthcare as well. So that would be like the
Thanks a lot.
Like, you know.
Wonderful. Thanks. Sorry, I lost you there. Thanks for your insights there, Anna. And if I can go to you next, Omar.
Sure. So, look, I think that we're going to see some continuation of existing trends. So, continuation of the verticalization of this industry, at least in the Middle East now, we're seeing a lot more. This is a fintech fund, this is a health tech fund. 5 years ago, we were seeing much more generic funds. I think we're going to see much more mid-career professional founders. As this industry becomes more specialized, you need more specialized knowledge. So in the medical equipment industry, you send a doctor to do medical equipment sales. And, an analogy would be that if you're going to build a really strong health tech startup, you probably need to have a doctor somewhere involved, or someone who really understands the sector. The same thing, you need a banker if you're going to do a really sophisticated fintech. So I think those people coming in with 10, 15 years of experience in those industries, with industry relationships and knowledge, are going to be much more common and successful in the coming period. We're going to see definitely much more unicorns from emerging markets. Robert, you were mentioning a unicorn from Poland or Eastern Europe. The Middle East region had one unicorn acquisition already, happened 2 years ago, $3 billion acquisition of Kelvin, which is the kind of Uber equivalent for the region. But we have at least a dozen companies that are valued at over $200, $300 million at this point. And so we are going to see much more of this. More B2B, because I think corporates are getting much more involved. I think the B2C space, a lot of people are focusing on it. B2B is underserved. So I think we're going to see more B2B investing. and corporates, definitely, they're going to get much more involved. So I think I'll comment just one thing on what Kevin said. It's a double-edged sword working with corporates, because if a corporate is your first investor, you also run the risk of alienating all of their competitors. So if you're a fintech and a bank is an investor, other banks may not want to work with you. So, and of course, corporates have a different culture and wavelength that they operate on, and so they're a challenging investor from a cultural perspective with the startups. But their role in this ecosystem is absolutely going to be much, much larger in the future. How they figure out how to broker that relationship with the startup community, that's yet to be seen. But those are some of my thoughts.
We have a secret sauce term sheet, Omar, on how to mitigate those neutrality positions, and I totally get what you mean.
I hope so, because some of it is not even about reality. Some of it is about perception, right? Oh, we're not going to work with you because you're working with someone. Even if there's no conflict of interest or sharing of information, maybe there's some pride in there. Maybe there's some PR in there. And all of those are components of that, because we're seeing this on ground, here in the
Super.
US.
Thanks a lot for your thoughts there, Omar. Over to you, Robert.
So more or less, I agree with everything what was said. In terms of sectors, on top of this sustainability and healthcare, of course, automatization like AI, IoT, it's the obvious one. But I also expect that there may be more and more space technologies coming to Earth. In terms of, let's say, Europe, and especially Central and Eastern Europe, I expect some consolidation of this market, because on one hand it's a quite young ecosystem. So the people are GPs. They have first, second, third, maybe fourth fund, and of course each one is a bigger one. But when you have a look at the fund economics, there is so many small funds that it's really difficult for GPs to make some. I don't mention good profit, but even good salaries out of the management fees. So I expect that the good ones will grow, and the challengers will just move somewhere else. And talking about the corporations, yes, what we see in Central Eastern Europe is a lot of nearshore services, but more and more R&D centers. So I expect that those corporations will also expand in terms of innovation projects and accelerators, incubators, venture studios. So I expect much higher activities from corporate players in our region.
Brilliant, and we can meet later and discuss this more over a glass of wine. And finally, to you, Kelvin, predictions for the next 5 years.
Right. I think I have the last word. Thanks. The future of venture capital, right? For me, I believe it's going to be very different 10 years from now, where our children become venture capitalists, where our grandchildren become venture capitalists. Why do I say this? Because it's going to be an activity that is going to be highly specialized, but the current instruments in the market, like the fee structure and the screening and the legal part, just make it too costly. So to me, I see the rise of technology supporting venture capital fund managers like us to make it super, super cheap to screen and to deploy and to exit. That to me is the future. I think there is a fund in Silicon Valley that allows you to screen a deck and make a decision within 3 seconds or 3 minutes based on some of the AI in that screening. So legal structures and tax must also change to follow the rise of what I call activist and community-led investment, because as ecosystems mature, founders from the unicorns, whether it's Poland or Middle East, they just not going to retire like our dads or our moms into a wooden shack in the lake. They are still going to continue to invest. They're still going to continue to want to build new companies. So these founders will go on to build Tesla, right? I mean, look at Elon Musk, right? He exited from PayPal. He was with Peter Thiel. Now he's just doing crazy stuff, Hyperloop and all that. We're start seeing some of these crazy founders from our ecosystems, you know. So that to me is the future of VC. I don't know whether, you know, I made sense there on the last point, but yeah.
We all hope you're right.
Yeah. The only point I will is that the prospects of a month in a wooden hut by a lake sounds quite attractive right now. So. Okay, guys, lovely talking to you all.
All right.
For a great conversation.
Thank you. Good
Thank
night.
you.
Good evening,
Thank you.
all. Good day.
Bye.
Thank you.
Bye. Bye.
See you in the evening.
Bye-bye.
Yep, I'll see you there. Bye-bye.
See you there.